When Berkshire Hathaway makes a move, everybody pays attention. But sometimes the most interesting trades aren't the huge, flashy ones. They're these quiet, almost surgical shifts. And that's what we're going to break down today. A really fascinating pivot in the U.S. housing market that tells us a whole lot about how to win when times get tough. So here's the move in a nutshell. In the third quarter of 2025, Warren Buffett's team did two things at the exact same time. First, they sold every single share they owned of D.R. Horton, which is the biggest home builder in the country. And then they turned around and bought more shares of a direct competitor, Lennar. So this wasn't them getting out of housing, not at all. This was a complete reshaping of their bet on the market.
And that right there brings us to the big question. Why? This isn't just about picking one stock over another. This is about a very specific strategy for a very specific moment in time. So what on earth did the team at Berkshire see that made them choose one housing giant so decisively over the other?
Okay, to really get the why behind this move, we first have to understand the where and the when. Let's be honest, the 2025 housing market, it is not for the faint of heart. It's a really tough landscape out there, and that context is absolutely everything for this story. This one number tells you so much of what's going on. Right now, there is a 9-month supply of new homes just sitting on the market. Now, to give you some perspective, a 6-month supply is considered healthy, balanced. At 9 months, we are deep in a buyer's market. And that means builders are sitting on a ton of unsold houses. So what do you do when you have all those houses to sell? Well, you get aggressive. Nearly 40% of builders are just straight up cutting prices. And look at this. A massive 2/3 are using incentives. We're talking things like mortgage rate buydowns, where they literally help pay down the buyer's interest rate just to get a deal done. And check out the mood on the ground. For 16 straight months, homebuilders themselves have been pessimistic about the market. That's almost a year and a half of just sustained negativity. This tells you it's not some temporary blip. It's a really deep uncertainty about what's coming next. So let's be really clear here. The market is not in a 2008-style freefall, but it is soft. It's a market that absolutely demands heavy incentives just to close a sale. And maybe most importantly, it's unforgiving. One wrong move, one bad bet on a piece of land, it can be incredibly costly. And this is the environment that made Berkshire make its move. So if the market is that unforgiving, you can't just wing it. You need a specific playbook to not just survive, but to win. And Berkshire is betting that Lennar has the right one, and it's really built on 3 key strategies. So here they are. First, they have mastered how to manage the pace of sales and the price of their homes. Second, they have a super flexible land-light strategy that cuts down on risk. And third, they focus on repeatable systems, not just chasing speculative stories. For an investor like Berkshire that hates risk, this combination is basically perfect right now. All right, let's dig into that first one, pace and price. Lennar went early and they went hard on incentives. We're talking discounts over 13% of a home's value in some cases. But, and this is the really critical part, they didn't just do it blindly. They matched every single discount with really careful control over how many new homes they started building. The goal was simple: keep sales moving without letting inventory get bloated.
Their second pillar is just as important, this land-light strategy. See, instead of tying up billions of dollars buying up huge tracts of land that they might not develop for years, Lennar controls land through options and short-term deals. This gives them incredible flexibility. If the market suddenly turns south, they can just walk away, instead of being stuck holding a bunch of land that's losing value.
And pillar number 3 ties it all together: predictability. Lennar has built this unified, repeatable machine. From how they sell, to how they build, to how they handle financing, the whole process is standardized. An investor like Buffett isn't betting on exciting, unpredictable stories. They're investing in a system that they know is going to deliver consistent results. This quote just nails the entire idea perfectly. Buffett does not need upside surprises from Lennar. He needs fewer downside surprises. Think about it. In a soft, unforgiving market, the game isn't about hitting home runs. It's about not striking out. Berkshire is betting that Lennar's systematic approach means fewer nasty surprises. And right now, that is the most valuable thing you can buy.
So what does this all mean for D.R. Horton? Well, it is so important to understand that Berkshire selling its stake is not them saying Horton is a bad company. Far from it. This is purely about a strategic recalibration of risk for the world we're in right now.
Just look at the contrast here. D.R. Horton is more aggressive about its growth targets, and it uses a heavier, long-term land strategy. Now that exposes it to what you might call the volume/price knife edge, that really tricky spot where you have to keep cutting prices to keep sales volume up, and it could just crush your profit margins. Lennar's lighter, more flexible approach is simply better suited for this kind of choppy, uncertain market. But this story is bigger than just two companies. When a giant like Berkshire reallocates billions of dollars, it sends a massive signal to the entire home building industry, from the biggest public companies all the way down to the smallest private builders. For the big public builders, the message is pretty clear. The market is now valuing predictability way more than just pure, aggressive growth. And for the smaller private builders, the message is maybe even sharper. Your lenders and investors are watching. Capital is going to flow to the operators who are disciplined, not the ones who are just hoping the market turns around. And for those smaller guys, this has real-world consequences. We're not just talking about stock prices. Banks, private equity firms, they see this Berkshire trade and they see a new definition of what a resilient home builder looks like. And believe me, that is going to directly affect who gets loans and investments. So at the end of the day, Buffett's move really forces everyone in the entire industry to look in the mirror and ask themselves three really tough questions. Can we really manage pace and price effectively? Is our land strategy flexible, or are we basically betting the farm? And are our operations a tight, predictable system? And that leaves us with this one big final thought. For years, the story in housing, and really in a lot of industries, was all about growth at any cost. But maybe, just maybe, Berkshire is signaling a massive shift. In a world that's defined by uncertainty and risk, maybe the most valuable thing you can have is just being predictable.